A very good evening, everyone. Welcome to Admiral Markets here, our webinar on the characteristics of the currency pairs. It is 12th of September, and we're excited to look at this webinar, educational webinar here. But before we do that, of course, we're going to go through just a few introductory slides explaining that, first of all, the webinar is hosted by Admiral Markets and presented by Tarantula and myself. And also, we should note that we, of course, have great spreads here that you can see, for example, in our live trading rooms as well, and much more advantages mentioned in this slide. Here's just an extra emphasis on what kind of pip spread we trade with, and I'm sure you noticed that in the trading room as well. As always, of course, trading foreign exchange is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and that this video is for educational purposes only. All right, so once again, thank you for your attention on that. Today we're going to take a look at the characteristics of currency pairs, and I think that's going to be a very interesting webinar. But before we do that, I'm going to say hi to Michal, a manager here at Admiral Markets, in fact, and welcome.
Welcome. Good afternoon, everybody, or good evening to some of you who have already have darkness outside. Good afternoon and good evening to all of you. Thank you very much for a wonderful introduction, Chris and Toronto. I'm pretty sure we're going to have a great webinar session today. But before we do that, let's take a small detour like we always do before the webinar and listen to a story that I thought might be interesting. Once again, my name is Michael Onachov, and I'm a client relationship manager at Admiral Markets. My job is to create the best possible trading environment for all of you here. Here's my email address, my Skype here as well. You can add me on Skype and just ask me any questions. I will be very happy to help. I'm very pleasantly surprised how many people actually do that. You can always Google my name to find me on LinkedIn. I'll happily accept all of your connections. That's what I'm here for, to engage with you people and share my experience and hopefully help you with something interesting. And I'm very excited to speak to all of you today once again. I see that the amount of participants is growing, and we do have people who attend those webinars on a constant basis, and it is very pleasant to see that. It's great to see that a lot of our traders do not stop and carry on with their education, trying to make tomorrow more profitable than today. And when you work in a financial company like I do, you get to meet a lot of different people who are interested in finance. You meet traders who have been trading for years. You meet people who are just making their first steps in the market. You get acquainted with successful traders and the ones whose profits, well, are not as high as they could be. I've always wondered what separates a successful trader from the rest. If you analyze the field, you reach a conclusion that great, stable results are not always down to the strategy implemented or not even down to intellectual capabilities, although both those things are important. But I wanted to speak about something else that should be considered as well. After all, the things you should know to be able to make good decisions in Forex are difficult. Those are very complex subjects, and you have to follow a lot of the news. You have to understand financial markets really, really well. But the concepts are not impossible. And I'm sure that every single one of our traders could have seriously improved their overall trading results if they tried hard enough. I'm convinced that a lot of our traders must go beyond learning about the variety of trading techniques and should also approach their trading from a motivational and psychological side. It is fairly simple to measure your success in trading. If you're profitable on a constant basis, you are a success. If you make losses, well, you're not that successful. So today I wanted to talk about the factors that make you a successful trader. Not only a trader, but a successful person in life as well. Here's a picture of Angela Lee Duckworth, and she has conducted a very interesting research in the United States. She studied people in challenging environments, and the aim of the study was to determine who was successful and why. She studied teachers, army personnel, and salespeople from multinational corporations. And at the end, one key characteristic emerged. And it wasn't IQ, it wasn't health, it wasn't good looks. It was grit. Grit is passion and stamina towards your long-term goals. Grit is the ability to stick with your future day in and day out, not for a day, not for a year, but for a long, long time. It is living a life like it's a marathon, not like it's a sprint. As you can see, here is a picture of a London marathon. This is just a starting line. We see all those people who decided to attend the marathon. And let's look at the finish line. There's only one person who is finishing. There's nobody behind him. He is all alone, the only person standing. And it's all down, a lot of it is down to training and his ability to train very hard. But this ability is often determined by grit. And to me, the most interesting thing about grit is how little we know about it and how little we try to learn it. How do we get ourselves motivated and have the strength to follow through with our commitments? And the answer to this question is, well, no one really knows. We don't know what actually gives you the strength to follow on with the goals you've set. So far, the best idea is being developed in Stanford University. It shows that your ability to learn and to analyze, that is pretty much what Forex is all about. It's about learning and analysis. Well, this ability to learn is not constant. It changes with your efforts. And more you try, more things you do to get better, for example, trading, greedier you become. You become a person who is a lot more likely to persevere even if he fails. I wanted to let you know that failure is something that failure in something, it can be anything, it can be in life, not only Forex, but is not attributed to your talent or your intellectual capacities. It's about your lack of grit. When you choose something as your goal, as your aim, you have to put continuous efforts into achieving it. For all of us here, we use Forex as a tool. We want to use Forex to have a source of extra income and then possibly as a path to total financial independence. And that is a great future we have imagined for ourselves. Many of us fail, but we fail not because of the economy. We fail not because of the broker, not even because we're not smart enough. We fail because we do not have the grit to follow through. We don't have the grit to follow through on our dreams every day, year after year, and this is a problem. Now, this is why I spoke about people who attend the webinar on a constant basis. You're getting there. Keep learning. Keep doing things better than you would have done them yesterday. Success and everything that comes along with it is reachable. All you have to do is work towards it every day for years and years. Do not give up. This is something I really want to take away. This is something I really want you all to take away from this presentation. Giving up is just simply not an option if you want to succeed in Forex trading. So you've done a first step today. You've attended the webinar. Now you can show your grit and perseverance by listening to the webinar right until it's finished. Thank you very much for your attention. I will now pass the microphone back to Chris and Tarantula, who will keep on talking about the most interesting and fascinating subjects, Forex trading. Thank you very much, guys. It's been great speaking to you.
Thank you so much, Michal. As always, a big thanks to Michal. And we're going to continue now with understanding the special and unique characteristics of these various currency pairs. So, you know, it's a topic that we thought would be interesting because there are local differences kind of in this global economy, even within currency pairs. And we're going to talk about that, the correlations, what are the majors, what are the crosses, what are the exotics, and then look into a bit of specifics as well and some key characteristics of the euro dollar, pound dollar, odd dollar, for example, and dollar yen. All right, so first of all, now this is a bit of a basic introduction, but it's good to note, of course, that these currencies are always paired. We're viewing in a way, of course, the euro versus the dollar, and it's their economies in a way as well. It's a relationship that is versus the euro and the dollar, and it's their ratio that is deciding the price. So the euro could be a good performer in a way, but if the dollar or the US is even performing better, then tough luck for the euro, and the euro dollar is going down, for example. All right? It's that ratio, the relationship. Now, often enough, these pairs are cited as euro dollar, pound dollar, not as dollar euro, dollar pound, although I have seen that on the BBC sometimes mentioned as dollar euro. Don't ask me why, but the first is more typical. Anyhow, that's all basic. Of course, you also know that the currencies have, most of them have an index. The dollar index is very famous for that, and we do look at that occasionally in our live trading room as well. And that's basically just a basket of currencies, and there's a weighted importance given to a particular currencies. So for example, for the dollar index, the biggest influence, of course, is from the euro, and that weighs the most in that dollar index. Moving on to currency correlations, basically we have correlations between, we'll talk about this more in the webinar later on, but there are correlations between these currencies. And for example, the euro dollar and the pound dollar typically would move in the same direction. There are though differences between their movements, and that of course has to do with their crosses, because all these currencies not only have relationships to each other. For example, the euro has a relationship to the dollar and the pound to the dollar, but the difference between them, of course, is the fact that you also have a euro pound moving, and that cross is not standing still. It is also moving. So yes, typically the euro and pound would move up against the dollar at the same time, but the euro could move more or the pound could move more depending on what the cross the euro pound is doing. If the euro pound is an uptrend, there could be more strength of the euro against the dollar, for example, while the pound could be weaker and could act more upon a downtrend and could fall more. All right? So that is typical for all currencies. You could have, for example, the euro yen and the pound yen typically moving the same, but again here example of the euro pound giving the influence which moves more, or maybe the New Zealand CAD and the odd CAD. The odd New Zealand would then decide which one of the two would move most in an uptrend against the CAD. So this triangle, of course, is important to realize. So if you're doubting, for example, between trading the euro dollar or odd dollar, what you could do then is check the euro odd and see what that currency is doing, and then decide, for example, if you want to go long euro dollar or odd dollar, check euro odd and see which one is an uptrend, and then take, for example, depending on the answer, the euro or the odd. So that's just some introduction here on correlations. The correlations do change. The dollar Swiss and euro dollar were quite correlated. They haven't been, so I saw a study that the last year was very weak correlations, in fact, between the two, while in the past they were a lot stronger. So these vary. Odd and gold were, for example, heavily correlated in the past when odd, let's see, moved down a lot. No, when was that? Gold was falling a lot, I think, or moving up a lot in when was that? Well, anyhow, I forgot the exact time frame. I would have to look at a chart. I don't have that in front of me. But the correlation did break down a bit recently, I remember. Now, of course, we have the dollars and majors. Those are the majors. Main currencies are dollar, euro, yen, pound. Those are traded the most, especially the dollar, of course. And these are the major currency pairs, the euro, the pound, the euro dollar, pound dollar, the dollar yen, the dollar Swissy. Major crosses are, for example, euro odd, pound yen, euro yen, dollar CAD, maybe. And, or maybe that's even a major, but I consider it a cross. Exotics would be, for example, of course, like the euro zloty, Polish zloty, or the dollar Czech crown, or the CAD yen. Those are more currency pairs that you would not see typically or often, and of course not as frequent and popular to trade. Now, there are some certain specifics that each of these currencies have, and we're going to dive into those a bit more, but this is just a basic explanation of the major currency pairs and major crosses. And Talanta is now going to actually explain a difference also between the currencies, because some of them are actually commodities.
Yeah, Chris, exactly. Hello, guys. Hello, everyone. I will explain you, and you made a great example, a great introduction to our webinar today. So I mostly trade major pairs, including euro dollar, cable, sterling pound dollar, and of course Aussie. Most of my trades are euro dollar, so I will explain later all characteristics of euro dollar, cable, and Aussie. But before we do that, we need to know exactly what are commodity currencies, what are capital flow currencies, and later I will tell you also what are exporter currencies, high-risk currencies, and few words about exotic currencies. So first thing is to know that commodity currencies are especially CAD, Australian dollar, and New Zealand dollar. So well, to be honest, guys, much of these movements the last few years in euro were driven by commodity currencies, and especially it was a thing with New Zealand dollar. It's called Kiwi, and it was some time ago when you could do basically a technical analysis just observing commodity currencies. So you could have done your technical analysis on euro dollar just by observing Kiwi, let's say. But today, well, today some things have changed, and well, the things not always change for the better. Most of the time they will go for the better, but not always. Let's say that commodity currencies, so such as Australian, Canadian dollar, Brazilian real, South African rand, or the Russian ruble, we call it rubля, it's ruble, I think, in English. So those are all commodity currencies, and those are monetary units of commodity exporting nations. So commodity currencies are monetary units of commodity exporting nations. There is a great degree of diversity among commodity currencies in terms of trade balance or economic sophistication. But due to large currency inflows generated by proceeds from the sales of commodities, the value of these currencies is strongly dependent on the buoyancy of the global commodity market. So it's very dependent on buoyancy of global commodity market. So it's not always that we can do some technical analysis just observing commodity currencies. It's not always the same thing. But let's say that cable, Aussie, Kiwi, dollar CAD, CAD, and dollar yen are commodity currencies. So these pairs are commodity currency and currency crosses. Then we say, let's say we call it majors, but those are capital flow currencies. Those are capital flow currencies, and well, those are currencies of nations which have a dominant role in global economic transactions. Those are European Union, those are of course England, UK, and of course Japan. And most of those strengths come from regulations done by European Central Bank, Bank of England, and BOJ, it's Bank of Japan. So those regulations give us the move of capital flow of the currencies. Let's say that, well, European Union, Japan, and United States, they're very important powers, and well, they fill the coffers with money for central banks around the world. But let's say that the role of the Japanese yen as reserve currency has been good established. It was established around, I think the year it was around 90s. But after the euro has been introduced, euro has been increasing continuously since its launch, since its inception, the launch. Well, among all those changes, US dollar has remained as the one major currency that has the greatest preponderance over everything else in central bank currency allocations. So still yet again, we need to say that the dollar is well, it's the chief currency. we can talk about dollar weakness, we can talk about dollar strength, but one thing is for sure, is the chief currency, major currency, with about of 2/3 of global forex reserves, which are denominated in the dollar. Dollar is the reserve currency of the whole world, including China. And you know that when Chinese reserves are all put, and most of them, 2/3, are held in dollars. And for us traders, important rule of the thumb is that reserve currencies as a group tend to depreciate in times of turmoil, and, well, not say always, I cannot say generally, but let's say that they tend to depreciate in the times of turmoil and to appreciate at times of economic growth. But if you observe last 2 years, they tend to depreciate in times of growth and tend to depreciate at times of economic trouble. So this is all generalization. We cannot say generally, but if you watch, let's say NFP once per month, you will see how those currency pairs are all driven. They're all driven by dollar strength or weakness. So financial structure of the global economy, economic activity usually leads to, let's say, a balanced supply of reserve currencies during robust economic growth. So that is not, now you don't need to know all of that to the letter, but let's say that we have cleared it out what are commodity currencies, what are capital flow major currency pairs. So we can move on to our next slide, and I will explain you something about euro dollar. Euro dollar is well, it is indeed now at the moment most traded pair. It's well, it's negatively correlated to Swissy, and it's positively correlated with cable, with sterling pound dollar. Important thing is to know that a few years ago all those spreads were a bit higher, and now by introducing ECN market and interbank electronic trade, we can make good profits with low spreads, and those low spreads are usually around 0.5 to 2 pips for euro dollar. Daily average range now is a little bit lesser than it was a few or 3 years ago. Now it's around 60 to 100 pips. That's for dollar. It's 60 to 100 pips because now now times are, we can say that these are turmoil times. These are not great times. Well, the easiest thing was, well, it was some 6 years ago, 5 years ago, when dollar was losing its ground almost every day versus euro was losing its ground versus dollar, and it all was waiting for retracement and then short euro, and it was short the euro, short the euro. Well, the things have changed. Now, I cannot say that that will happen anytime soon. So the best time, and it's always best time to trade euro, there is London said. I don't recommend holding overnight trades because your trade can be falsely closed. If you watched price action today, you saw what happened. Well, euro was a little bit high. It was around 32.10, and then after the dollar news, it went to test 32.55, and then it jumped to 32.24, right? And it still has potential to go to 33.50. But the thing is that this daily average range is a little bit, it's wide, because we take into account the whole movement, not just a bullish or bearish trend, the whole movement of currency pair. And because of that, the only time when I recommend trading dollar is London session. Don't trade euro dollar in Asia. I don't recommend it. Well, maybe you can scalp it, you can do some range trading, but the best time to position your trade is London session, and of course London Europe cross session when Wall Street opens up. Euro dollar is a pair which is suitable to new and advanced traders. That means that both of new and advanced traders can trade euro dollar. When I started to trade, I trade solely euro dollar without any currency. Of course, with some experience, I started to trade cable, started to trade Aussie, and well, there were times when I traded Swissy, but now, because of that double exposure, I don't trade Swissy and euro together. I pick either Swissy, which is very, very rare, or almost never at the moment, or euro dollar, which is very common to me. Factors which mostly affect euro dollar are, of course, the interest rate differential between ECB and Fed. So it's the interest rate differential between the European Bank and the Federal Reserve. If you watch dollar index, you know that dollar strength drives euro dollar lower. So some of traders which who I know of, trade solely by watching US dollar index. So they watch euro dollar index, it's called USDX, and if they notice that USDX is going up, they would usually short euro dollar. And it was, well, I don't do that, but I know that that can be also a successful strategy because dollar strength really and indeed drives euro dollar. Fed intervention to weaken the dollar sends euro dollar higher. Always, it's always like that. Have that in mind. If there are talks that Fed intervention would weaken the dollar, that would absolutely drive euro dollar higher. But now at the moment, those big interventions of federal banks are not so common as they were a few years ago. They're not so common. They were common when euro was falling against losing its ground against dollar. Then there were some big interventions. There were some also interventions with yen. But nowadays, I don't think that anytime soon Fed will intervene to weaken the dollar, because dollar is not so strong. So if that happens, of course, it's the right of every nation and the right of every central bank to intervene to keep the currency inflow. So that is to stop the deflation or exporting, because for some countries, well, for most of exporting countries, having their main currency strong is not very good for exporting. So that is all concerning euro-dollar currency. I just need to say, because I mentioned the exported currencies, just to say a few things about exported currencies. Currencies of nations like Singapore, Japan, China, with large forex reserves accumulated through exports are called exporter currencies. The value of these currencies is related strongly to the health of the global economy. As they depend on foreigners for economic buoyancy, any disturbance to the health of the global financial system can have outsized consequences for these nations. Nonetheless, well, due to their large forex reserves, they are all well placed to withstand the impact of any economic shock, better than most of their peers. So those are currencies of Singapore, Japan, and China. Also, when we talk about euro-dollar, which is most traded pair, I can see that that is called a low currency, a low-risk currency, because we have high-risk currencies and low-risk currency. High-risk currencies are examples, let's say, Romanian leu, currencies of Baltic nations, or Turkey. These currencies are high-risk because they appreciate at the times of economic growth and depreciate during recessions and crises. They are not very strong. They will depreciate always when there is recession and crisis. So there are high-risk currencies. And I personally don't deal with it. I don't deal with it. So that is about euro dollar. Now we have cable, sterling pound dollar cross. I have read somewhere that cable last year it was third traded pair, but my opinion is that that is most traded pair along with euro dollar. And I think it's really because daily average range is more than euro, it's higher than euro. It's also, well, some 4 or 5 years ago, cable was absolutely without any movement during Asia session. Now we have some movement of cable in Asia session, but let's say that cable is well, it's really most traded pair along with euro. It's negatively correlated to dollar Swissy, Swiss franc, to dollar CAD, to dollar Japanese yen, and it's positively correlated with euro dollar. Usually there is some positive correlation. Of course, always take into account news that were given for that day. So if the news for cable and especially for sterling pound was bad, then you should neglect that correlation. But if the news are going well, good for euro and good for sterling pound, it's always 90% of the time that euro dollar and sterling pound dollar are correlated positively. They go in same direction. They go in same direction. Average broker spread is 1 to 3 pips, depending of course on the broker. Our platform gives us a very good spread for cable. Sometimes it's even below zero. It's 0.7, 0.6. So today spread is great with cable. But we also need to say that daily average range for that currency pair is anywhere from 80 to 150 pips. Best time to trade is London session, but trading is suitable only to advanced and expert traders due to a big volatility and due to a big range of that currency pair. So trading is suitable only for advanced and expert traders. New traders shouldn't deal with cable. Factors which affect cable are the interest rates differential between the Bank of England and the Federal Reserve, and high yield and attractive growth in the UK drives the currency pair higher. So those are characteristics for cable. And now I will explain you characteristics for Aussie also. Do you have anything to add, Chris, concerning cable? Because I know that you trade it.
Yeah, I will just indeed had a slide here ready for the pound. I was indeed focused for a while on trading the pound, and do not do so anymore though. But there are a few things that I would like to add indeed, and they're just kind of observations, and we talked about a few of them actually already in a separate webinar, which you can find, and I'll show you at the end of the webinar when we look at our Admiral Markets website, where you can find the webinar archives, in fact, and it's called Intraday Trading the Pound Dollar. But just a few highlights, I guess, and not all of this is per se, always happening 100% of the time. But as Toronto already said, it's usually a very quiet during the Asian session, and it doesn't move that much. I mean, typically, I think that I did a research once on that, and I think the first few hours of Asian session, you hardly see the difference between the high and the low, not more than 20, 30 pips. I think 30 pips, 90% of the time, it wasn't bigger than that range. So yeah, obviously not much movement in that session. More movement probably on the Aussie and the dollar yen. There are some often enough spikes up and down, and I think that's really one of the reasons why it's more tricky or riskier to trade probably this pound dollar than other currencies. And a lot of this volatility is happening actually just before maybe Europe or after Europe and after London Open. And you kind of have these false moves sometimes a few in a row before you see an intentional move where price is driving into one direction and you get maybe an 80 pip run into that direction. Prior to that, maybe you had a couple of 20 pip or sometimes 30 pips up and down before you get that intentional directional move. And often enough, when you do get this directional move, this impulse, this faster move, another word for impulse, often lasts like an hour, 15 minutes, maybe 1.5 hours, 5 times 15 minutes often. And yeah, it typically goes, depending of course how much space there is to the next resistance and support level. That is always a bit dependent on the structure of the setup of the market and the currency at that time. But it does often go close to a fib sequence number, for example, like a 55 pipper or maybe an 80. What is the next one? 89, right? The pound, as Toronto already said, likes 89, the number 89. So Toronto actually, you talk about 89 using the moving average, for example, 89 with the pound.
Yeah, 89.
Yeah.
Exactly 89. It likes also 200 EMA.
Okay.
Yeah.
And we talked about that in the
EMA.
webinar. Which one was that? That was, I think we talked about strategies, intraday strategies maybe?
Yeah, I think it was intraday strategies, yeah.
Cool. Yeah. So, you know, but that 89 is definitely something you see indeed. And for example, so you have, when you break tops and bottoms, I'm talking about a 5-minute chart, often that break of the top or bottom, if it is at the beginning phase of the day, let me say it that way, when you have those spikes, where you can expect those spikes, it often breaks the top 8 pips normally, top or bottom, and then does the opposite. It doesn't continue. So now that also still depends, of course, on the setup of the market in a way that if you are in a trending mode, which often of the last few years doesn't happen on the pound dollar because from a wider perspective it's just pretty tight range if you look at the weekly. But anyhow, we did have a pretty good fall on the pound dollar, of course, in February this year, and I think it was February and March, right, when it fell from 163 to 148. When it's really trending, then it can keep on going, and it could keep that impulsive, intentional move for quite a while. But if it's more of a range-bound environment, then often enough it will not keep moving. Asia would not move. Asia would move if it's sometimes really trending, by the way. But if it's not trending, it will often break something by 8 pips and then do the opposite for a while. Okay, it could still continue, but it will give a retrace first. Definitely impacted by news events. Usually always that news release at 9:30 a.m. UK time, if there is news release. And what I found is typically retraces quite deep. 886 fib is often used. Not many maybe know that fib. If you don't know that fib, I think it is useful for the pound dollar, I would say. 786 as well. I think the 886 is just a square root of 786 again, if I remember correctly, but quite useful for the pound dollar. And yeah, I think it likes to break tops and bottoms and almost do the opposite. I mean, prior to this move here up to 158, it actually broke the bottom at 148. And what did it do? It actually totally did the opposite. After the big bottom break, it just surged to the upside, didn't it? So quite interesting, I think. And yeah, last year's quite rangy currency and behavior. So the next slide, I think I talked to quite a while already about some of this stuff, in fact, by accident, but we talked about already the top part regarding the Asian session, in fact, and I already talked about the false move before the intentional move. So we discussed this slide already. Didn't do that intentionally, but just went in one shot already. Well, I just made 2 slides to make it a bit more visual as well. And if you these green lines, these vertical lines, what they're saying here basically is the Tokyo Open, 3 hours after Tokyo Open, because I learned from a trader that the first 3 hours of Tokyo session you can consider as the initial high and initial low of the day. Now, of course, yesterday's daily candle has a high and a low, but when Tokyo starts, we have a brand new field in a way, brand new situation. Yesterday is still important. Yesterday's high and low and pivot points and all these supportive resistances still have some influence on today, but today is today, and it's just a fresh new day. So what does the currency do when it starts a new day and it just oscillates back and forth between 3 pips? It has to create some range that is used for the day, and it does so the first 3 hours. It kind of creates an initial range of a high and a low, and if you put a line at the top and the bottom of that first 3 hours, then you get this kind of zone here, like this. And often those levels are still quite interesting to keep, because if we stay within that, it's quite a ranging day. But so we can see that in this case we had an example of quite a trending start of the Tokyo session, because the third vertical line is the European Open. The fourth is the pound, the UK Open, London Open, sorry. So we had quite a trending Asian session, in fact, because if you look at the high here at 150.30 and the low is all the way at 149.80, that's pretty big movement, 40 pips, more than usual, let me say it this way. And it looks like we had a move up, we got a pretty big spike up, and then boom, fall. So it's just to show you those ups and downs before you get more of an intentional move, maybe. Let's see, here is again our open close, and within this false move you see a small spike up right here at London Open. We find support off this low, and we keep moving to the upside, okay? And often enough, if the high gets cut, what I mean with cut is broken every 30 minutes, you can expect continuation. If it's in a very impulsive move, 30 minutes is quite an important mark. Now, it could be 35 sometimes. As I said, it's not exact math, but is often a pretty good indication when the high doesn't get cut for 30 minutes that directional move is over. For example, here on the right side where I have the green circle, that was the end of that upside. Or here, in fact, as well, at the bottom where we didn't cut the low for 30 minutes, we got the opposite. We're going to take a look at the Aussie now and then dive into some others as well.
Aussie. Also, I want to tell you about cable, that cable reacts strongly to news. So I would suggest not taking any position prior to UK news. It's 9:30 London time, it's 10:30 our Central European Standard Time. So I would suggest not taking any positions, because even if you are right about direction for that day, the news can really and usually will hit your stop loss. So today you see also what happened to cable. It was around 57.90, and after the news it went down for some 20-30 pips. So even if you positioned yourself for long trade early in the morning, you would lose your trade, because you would eventually your stop loss would be hit. So I just don't recommend trading any cable cross prior to UK news. So after the news is okay. Wait for retracement, then enter on the trend, but don't do it prior to cable. A few things about Aussie. It's one of most traded currency pairs. It's not the most traded, but it's one of most traded currency pairs. That is the currency pair which central banks, federal banks trade the most. They like to trade it a lot. It's favorite currency of hedge fund traders also. So there are usually big movements for Aussie after 3:30 a.m. Central Standard Time, after the major news. So that can be decisive for the trend of that day. So it's negatively correlated to dollar CAD. It's positively correlated to New Zealand dollar. Average broker spread is somewhere between 0.5 and 3 pips. On our platform, of course, Admiral Markets, it's even better. It's around 0.78 to 1, but I'm talking about average broker spread. For other brokers, that is 1.5 to 3 pips. I cannot talk just about Admiral Markets, but it's the sure thing we really have best spreads here, and that is very important. Daily average range is in between 70 and 100 pips, but it can be a lot higher if there are some major news. So that can be around 120, 150. If there are any major news, the range indeed can be higher. Today range is 127, so it exceeds that average true range. And for last 7 days, average true range was somewhere around 79. So it stands in between 70 and 100, but after the news, it can be bigger. Best time to trade is London session, of course, Asia session. Asia session after the news. So if you want to trade the news, or if you want to specialize trading the news, you can trade it after 3:30 a.m. Central Standard Time. So after the news, and usually after the big movement, you can chase for retracements, you can position yourself for that day, so even you can carry on with the trade from Asia to London session. That was the thing for traders who traded the pair yesterday, last night. So what happened? It was a huge drop for Aussie, and well, what happened is that we will see if this is a just retracement or this can be some sort of reversal. We will see. Trading Aussie is suitable to advanced traders. I don't recommend trading Aussie for new traders. It's a strong currency pair. It requires knowledge. It requires also fundamental knowledge. So I advise trading only for advanced currency traders. Factors which affect the dollar, Aussie dollar, are interest rate differential between the Reserve Bank of Australia, RBA, and the Federal Reserve Fed, US Fed. And as I told you, always watch for interest rate decision for Australia. Also watch for unemployment claims, and those are major news which come around 3:30 a.m. Central Standard Time. After that, you can position yourself, you can try to trade it, but prior to that, only London session, and I don't recommend trading it after the London session closes. It will usually be in a small range, so it won't be very tradable.
Yeah, I think especially the interest rate here on the Aussie lately, I mean, definitely always an impact, even though it was moving down with that big downtrend, of course, since April. It does like to go up somehow. You can always see it. If there's a chance for the Aussie to go up, it takes that opportunity gladly, unless it's just so set in that downtrend like we had maybe in April and May. But yeah, that's definitely so. It's definitely, of course, a big difference between the dollar and the Aussie. And
yeah, but that is
increased a bit, but still.
Yeah, that Chris is because of the dollar. The Australian dollar is commodity currency, and
also,
it's commodity currency. So
yeah,
that is because of that. Large currency inflows generated by proceeds from the sales of commodities.
Oh, absolutely, and that's why, of course, the China data is also very important here.
China data, indeed.
Yeah, definitely, because that, of course, says how much, gives an influence or an idea how much the Australia could, for example, export to China, because the Australia, as you said, has a lot of commodities, and China is a big consumer of those commodities to make those goods that they produce for Europe and the U.S. So yeah, definitely very very important as well. So I guess we can take a look. Did you want to mention anything else on the Aussie in that case?
No, I think that the Aussie is clear situation. It's clear situation because I prefer to trade it. If I stay awake after that time, I can trade it. But nonetheless, the factors, which is, let's say that interest rate decision will affect trading Aussie for the next day. It will determine the trend for Aussie for that remainder of the day. So it's the earliest, probably, is the earliest trade you can ever get for some currency pair. Euro dollar is not strong in Asia session. It will usually reverse. There are no big news after 12 o'clock, of course, a.m. So what we trade is we trade Aussie dollar. We can position ourselves, and we can determine the trend for the next day after 3:30 a.m. So that is the earliest pair which can be tradable.
Yeah, absolutely. And I just yeah, I didn't have that much to add actually than you already said. But typically, I would say, as a from a technical analysis point of view, I have a feeling that it's good indeed for maybe beginners to trade as well. Just to get off the euro, I have a feeling it does not have those bigger spikes like the pound dollar, in my opinion. Often enough, if you do find a good bouncing spot for the upside, you could get, of course, the added benefit of that swap in interest rate, which could make it a bit interesting there. I do think that as I said, it doesn't have the spikes in ups and downs, so it does respect more of the tops and bottoms as well, in my opinion. And especially the odd likes to trend, I think, especially the euro odd. But we'll talk about the euro odd a bit later. The dollar yen, just a few notes. I think that typically the dollar yen likes to make ranges, wedges, triangles, and sometimes they can really be long drawn out. For those of you who remember or were trading, let's see, back in what was it, beginning 2011 and 2010, the dollar yen was just not tradable because it was just so caught in a chop down at, what was it, 77, 76, right? Touched 75.50, I think, at the very extreme, but just hardly moved 10 pips up and down on a day at one point or another. So sometimes it can take long to break. Eventually, it did break to the upside finally. But once in a trending mode, the dollar yen, I do believe, tends to keep on trending for a while. It is quite a powerful trend that can happen. It doesn't give many big or deeper retracements. It tends to keep pushing and pushing, and then when you get bull and bear flags, they tend to be shallow. So maybe they go to the 236 fib or 382 fib. They go sideways for a couple of hours, 10 hours, 12 hours, but then they break and continue. And that break is pretty solid. That break is often not a false break. It's often a pretty sustainable break, and it just keeps on breaking and breaking. And that was not only recently with the uptrend, when the euro yen was falling a lot, and in the down mode, bear flags were great things to trade on the euro yen, just like it was great trading the euro yen to the upside when you had a lot of these bull flags. So I would say the euro yen is a bit more volatile than the dollar yen, though, but still flags are good to trade on those. And the dollar yen, really, once in trading mode, keeps breaking out with nice trades. So that's what kind of like attracted me, or it was most noticeable for me with this currency pair. Just wanted to mention two other crosses maybe as well, like the euro odd and euro pound, for example. The euro odd really likes to trend. So if you like to trade with big trendy modes, then the euro odd definitely is trending a lot. It makes big moves. The disadvantage, though, is sometimes it really makes big moves, so you have big stop losses if you want to take a swing trade. That could be the disadvantage of that, but it breathes pips like it's nothing, because it just goes up typically, in a few hundred pips. Most recently, of course, since the May of this year, the pound and euro odd have traveled 3,000 pips to the upside, which is quite small if you compare it even to the down moves it has made. So really huge distances, and technically very nicely traded as well. Okay, and especially what I want to emphasize with the euro odd is, although it's a cross, it's a very low spread here with Admiral markets. So if you're wondering, yeah, I can't trade the euro odd because it's a great currency, but I'm paying way too much for spread, then one advantage of Admiral Market Brokers is definitely that it's very, very, very tradable with the spreads here that I trade with Admiral Markets. Okay. Another thing here on the Euro Pound, I'm not a big fan of the Euro Pound, but that's why I mentioned it here, in fact, because I don't like certain things of its behavior. I think it's kind of a slow mover. It's maybe good actually if you can't trade too frequently because it moves so slow, I have a feeling. But sometimes it makes awfully strange spikes up and down, and it's kind of like movements that sometimes really don't make sense in a way. It has definitely its own temperament, and I'm not a big fan of the Euro Pound. So sometimes I do trade it, and often enough, if I looked at my statistics, and often enough I lose on the Euro Pound, so it would be wise for me not to trade it because my psychology is definitely not in sync with this currency pair. And it's definitely a lot better if the Euro odd or the odd, for example. So that's just a few things that I wanted to mention here regarding the Euro odd and Euro Pound. And of course, we have other crosses. I mean, personally, I don't know anything particular, for example, about the CAD yen. I just didn't look enough at the CAD yen. I certainly have looked into CAD yen in my life, but not to say that I know anything particular about that cross. But typically, the pound odd would behave the same as the Euro odd, for example, in its behavior in a way. There's not that much difference, I think, between the two, as far as I know. The pound yen, for example, that is quite a different story than the dollar yen, though. Here, the pound yen really moves a lot. It definitely is a big-time mover, and the pound yen is not a currency I trade often. I think it's quite it likes to move a lot. It definitely does, but it has kind of the big movements of the Euro odd combined with the spikiness of the pound dollar, if you understand what I mean. So that combination never attracted me too much, and I kind of always avoided it. So I've never really dived into that currency pair. I do take a look at it. I do take a look at the pair just out of curiosity to see what it's doing for informational purposes. But because the pound odd kind of the big movements that the Euro odd and pound odd make, the pound yen does too. But just to emphasize, but then spikiness of the pound dollar added to it. So that's why I really never was a fan of the pound yen. And the other currency pairs, I think really that's kind of wraps it up. The dollar Swiss C was trending a lot in the past, but really quite slow moving since that big spike down to 70, then bounce up, and it's just gone flat ever since, almost on a weekly chart. Yeah, I don't know. We talked about, I think, really the major crosses now, I would say. Is there anything else that someone trades? In fact, we can ask you, is there any currency pair that you regularly trade that we didn't mention? And what do you think of that currency pair? Do you like it? Well, probably you do, otherwise you wouldn't be trading it. But is it something that, is there something particular of that currency pair or cross that you think is interesting and you want to share with us? Could be interesting if we get some opinions out there. So let us know. We're going to thank you for your attention, first of all. And Mirax is asking about the XAU USD and XAU Euro. Well, I never looked at the XAU Euro, in fact, so I couldn't comment on that. XAU USD? Well, it's not a currency I really trade actively. I've traded it a few times, but I do keep an eye on it. And well, basically it was just big trend, of course, in the 2000s. It was awfully rangy in the 80s and 90s, right? Just went nowhere. I do think it's technically very nicely traded, personally. It does respect the fib levels. So that's about it that out of the top of my head there. CAD yen, nothing to say myself. personally. Of course, from an economical point of view, of course, actually you use the gold. Funny enough, or not funny enough, interesting enough, of course, spiking up to its highest value around 2011, 2009, wasn't it? So 2009, when the crisis was there. So, it doesn't give, of course, any, what you know probably, it doesn't give any return of the assets. So if you hold gold, it's not going to give you any value. But then again, you don't have any default risk. Currencies always have a bit of default risk, even the most secure currencies. So although that's the turnout, that's like the ratio here is that in times of extreme insecurity, gold could be a bit of a interest for traders because of that security. Then again, it doesn't give any return, right? So also, by the way, on XAUUSD, they tend to move a lot on Monday and Fridays New York Open, by the way. I suddenly remember. Often enough around 2 p.m. my time, which is 8 a.m. New York time, on Mondays, Fridays, you often see a lot of volatility in the market, especially like it could be the first 10, first 30 minutes. That's what I used to notice. I haven't checked that in a while, so we would have to double check that, but that's what I used to notice in the past. Let's see, Surmat is saying we trade following news, but how much time does news affect currency pairs? A day, an hour, 4 hours? Well, I would say typically a red tagged event you would see definitely, of course, the first 5 minutes. Then you could see after effect maybe still within the half hour, I would say. And it depends if it's an NFP, probably longer. I don't check Euro index, no. I only keep an eye on the USD index. But I'm sure it would give value and would make sense to look at that, in fact, but never did that.
Also an interesting question. I came across this advice before. It is better to trade 2 to 3 currency pairs at the same time in order to spread the risk. What combination do you recommend? Well, guys, it solely depends of your leverage. If you are highly leveraged with one pair, don't open another trade. Doesn't matter what combination you use. It only depends of your leverage. Let's say that most of those hedge fund traders trade. Let's say how they protect themselves. They open 2 orders. First order is euro dollar. Second order is dollar Swiss. So basically, they like to protect themselves in order to if euro goes up, Swissie will go down, and there is some kind of protection. There is also called some kind of hedge. But I don't recommend it. Just use your stop loss, whether it is mental stop loss or your strict stop loss concerning the previous high or low, because that kind of trading, opening simultaneously 2 or 3 positions with pairs which have negative correlation, is only used for expert traders, and not for experts. For experts in that kind of field, experts. If you want to do that, you need to practice that. So you need to see what correlations, what are mostly correlated pairs, and then open a position in dollar in the direction of dollar index and versus direction of dollar index. That is how you protect yourself. Good website for correlations is Forex Ticket. I think forexticket.com, or it's Forex Ticket Co. I will see, and I will type so you can see it's forexticket.com. So that is a good site for watching correlations between currency pairs. It's here, forexticket.com. So I watch correlations between currency pairs on that side. So, but I don't do that. I don't open two positions to hedge my position or to spread the risk, because if you go with any kind of leverage, well, how would you spread your risk? Your risk is due to your leverage and to your stop loss. You base your trades not by your target price; they're based by your stop loss, because you need to cut losses short. You always need to cut losses short. So that is. I got late. When is this webinar again? This webinar is being recorded, so it will be uploaded. I would like to ask what is the minimum amount in order to join Admiral Markets. Just contact Admiral Markets. I don't know. I cannot tell you that because I'm an outsource for Admiral Markets. But well, you can ask, of course, the office in the town which you reside. You can ask, or you can ask globally. It's not a problem. So, well, it's, I don't know. I don't want to guess, but you don't need much to join. Does it make sense to bother with gold, silver, or oil? I don't do that. I know many traders, and I have heard that a big trader, which we know, but I won't say his name. I have heard something that he lost well, a bit of money on trading gold. And I personally know a guy from Forex Factory who traded gold, and he was successful 2 or 3 months. He was really, he was doing good, and then he lost in a trade. In a single trade, he lost everything plus 30%. So I never deal with gold, silver, or oil. For me, those are not currency pairs. Gold is metal, silver is metal, oil is commodity, right? Well, how would I am currency trader. I cannot trade metals. I don't do that. Maybe someone can, but I don't deal with it. I deal with as I told you, I deal with majors, with euro dollar, with cable, with Aussie, and by doing that, well, we spread the risk basically. So that is how I do it. I really don't like to bother with those other currency pairs and metals. So guys, I think, Chris, we have done our webinar today. I think there are no more questions.
Exactly. I'll just show them where you can actually look at the video archive. For those of you who got late, you can go to admiralmarkets.com, click on education, then go to webinars, and you'll get to this page. And then here at the top, you have video archive. So if you click on that, you can see all the past videos, all the way from dating back to February. And in fact, it's becoming a pretty cool collection of a lot of topics. So if you go through all of them, I think you are well set regarding the education, in fact. And you can also sign up with live webinars here for any one of those next week, and we'll give you a tour of what you can expect next week. First of all, you're going to be taking a look at a live webinar here with Tarantula trading breakouts, so that's going to be very cool, the 16th of September. Then live swing trading is back on 17th of September on Tuesday. That's Tuesday, by the way. Trading breakouts is Monday, and intraday trading is on Thursday, for example. All right? And next week, we're going to talk about how to trade divergence. So that wraps it up for today. Thank you so much.
Yeah, we can wrap it up. Thank you, guys. Yep. Thank you for attending. And, well, we see you soon with our new webinars. Take care, and don't open trades with big risk. Trade carefully and smart. So, guys, cheers and many green pips to you all.
Cheers, everyone.
For your